Hello, this is Teddy Keckstedt from Forex Trading Unlocked, and today Forex Trading Unlocked and the Nadex are bringing you the webinar Trading in the Now, a technical approach to the Forex markets. So today we will be looking at the major currency crosses and then also taking a look at the different potential uses for the Nadex binary options that you could use for trading the Forex markets. So the first thing we want to do is to get through some necessary business, which is to go through our disclaimers. First, we have a disclaimer from Forex Trading Unlocked. Please take a moment to view this. And this is all, this webinar is for educational purposes only, as the disclaimer also says as you read it. We are here today to analyze markets and take different technical approaches to figuring out whether the market is possibly going up or down, and then what trading scenarios you could possibly implement on them. So this is our first disclaimer, and then we have another one here from the Nadex also. So please take a moment to read this disclaimer. It's basically the same thing as the other one. So it's all just indicating once again that we are here for educational purposes only and to interact with you if we have some time also for questions. But no, we're not here to give you any trading recommendations. So with that, let us move forward. And we are going to first start with the breakdown of the major markets. We're going to analyze them from a monthly basis on down, and then what we will do is we will define tradable levels. So from these levels, then we can, depending on whether you're bullish or bearish, we can decipher different trading strategies that we can possibly implement. So, and from that, we will find potential binary option strike prices that are offered on the Nadex exchange that you could possibly use for these strategies. So for those of you that are not familiar with Nadex binary options, you can use these to trade the levels and to limit your trade exposure and to avoid getting stopped out. For those of you that have been trading the Forex markets for years, or for those of you that are very new to the Forex markets, I'm sure you're aware of the fact that they can get very whippy, and there's often times where you may be right on direction, but because of the volatility in the market, you can't withstand the trading exposure. So, and a lot of times, this is something that really weighs on many traders, and their P&L is reflective of these situations. So, and this is something that we're going to try and avoid and learn how to at least be aware of. So, Nadex binary option review. Nadex binary options are one way to trade the levels, like we said. They also are a way to limit your trade exposure. And this is where, like I was just saying, to help you from getting stopped out during the market swings, you know how much money you're allocating to any given trade at any given moment. And you also know where your profit potential is capped out at. So unlike in the normal Forex markets or futures markets, you don't know exactly where things are at. You may have stops in the market, but you can have the market can blow through those stops and you won't be filled at those prices, which means your loss will actually be exaggerated. So the Nadex binary options are a way to buy time to allow your trade to develop. So in this case, like I spoke earlier, is that for those that have been trading the Forex markets, I'm sure they're aware of getting situations when numbers come out, especially and other economic events, that people get stopped out habitually. But then the market comes after the noise and the volatility begins to settle, then all of a sudden the trend or the direction that the trader was looking for the market to go, that's where it ends up going. But the only thing is, they're no longer involved in that trade. And this is something where with Nadex binary options, you have the ability to buy the time to allow that volatility to die down and then let the trade develop and realize a gain on that trade if it was in the proper direction, of course. So where will the markets go? Binary options ask a simple question. Will the markets be above or below this price? And when we do our analysis today, that's what we're going to do. We're going to find different market levels, and then depending on if you're a bull or a bear, how to use that binary option or find a binary option or potential options to use for different strategies. So the basic thing that they ask is, will the market be above or below this price? If yes, you buy the binary binary option. And if no, you sell the binary option. It's pretty basic. There's not much, there's nothing more to it than that. The profit potential is quantified and the risk is always capped. So once we pick our levels and we get on the Nadex platform, you'll see how we can find the pricing, and then you'll see how your risk is capped and you know what you can make and what you can potentially, your potential loss may be. So by the time for your trade, by the time you for your trade, you can avoid being stopped out, and then you know where your risks are. So it's nice to know that if you are right, you know for sure exactly how much you're going to make. And if you are wrong in your trading rationale in the trade that you put down, then you know exactly what you're going to lose. Versus in the futures markets or in the Forex cash market, you don't know exactly what you're going to lose because you may, if the market, depending on volatility, you may get stopped out at a level that is not that where you had initially intended your trade to be stopped out at. So moving forward, we will start to get into some analysis. So the first thing we're going to do is we're going to take a look at an article that I had written for the Nadex back a few months ago, and it was about the U.S. dollar Japanese yen currency cross, which is one of the majors. And as you can see, bullish setup amidst global tensions. So that was the article title. And at that time, we had the market had been trending lower for months, and then all of a sudden took an abrupt turn over the course of a couple of weeks. Now, as you can see in this example where it says the US dollar / Japanese yen 1D, that means this is a daily chart example. So at the end of March, at the very bottom of the example, you can see an arrow that points to a bullish engulfing pattern. At that point, the market established a low. And then there's a series of 1 and 2 going higher, which was the new move high and then a higher move low above the low that was established. Now at this point, the market had been trending lower. Now all of a sudden it made an abrupt turn to the upside. At the same point, we had some levels that we started to discover because of this move, because of the bullish engulfing pattern signal. And then there was a reverse head and shoulders neckline. If you look at the blue line that's coming down on an angle, the point where it says 1 and then it starts on a previous high before that significant low where the bullish engulfing pattern was established, that line becomes a very strong resistance level and a buying area for bullish traders typically. So when that neckline was taken out, we have another reason to believe that this is no longer just a short-term correction because the market had been trending down for months, and now it's heading into almost a half a month of trading where it had been trending higher. So we have some targets where it says the 3 with question marks. That's a key resistance band target area. So that was figured out from that very bottom low and then using that neckline, and that was basically the level that if this is a bullish move and it's going to continue, it should hit the 3 area before you see some true market digestion or a turn back to support, meaning that this is really just a corrective move higher. So let's see how things went forward with this. So in our example, we had the US dollar JPY greater than 106.75. This is a binary options strike price that was on the weekly Nadex binary option platform. So the price of this binary option was $65.75 with 2 days until expiration. From the platform here, you can see where we had executed the trade, and so it shows once again the position value and also the expiration date. If you can see the cursor here, April 20th. And then here to the left of that, it says 2 days. So at the time of this example, this level had 2 days left to be either a positive or a negative result. So here's also, once you place a trade on the Nadex platform, you get a confirmation from the Nadex platform. This was a demo order, and it shows once again the US dollar JPY greater than 106.75, and then it says 3 p.m. So this is the expiration here, right here, showing once again April 20th, and then obviously the year because this was a current example. And then it says direction buy. Remember when we started the review. For a binary option, you're either buying if you think it's going above the level, going to be greater than, or selling it if it's below. Here's the quantity and here's the price. So once again, this option, had you bought this, meaning that you thought that within the next 2 days the market would expire above the 106.75 strike price, then you would get your $65 back plus the remaining money to equal $100, which would be the maximum profit you would get. Now, we also at this time on this chart had another level and another option price, because this is where we're going to get into strategies later. So at this time, there's also the 107.25 strike price. Once again, it's a weekly option, and the price of this binary was 39. So this one was cheaper, but it was also a higher strike price. So there's more risk involved because the market has to settle much higher. Once again, 2 days until expiration. So with that, we go back to the platform, and you can see that once the trade was executed, you have your position quantity, you have your current market value, your position value, same expiration, 2 days. So now for this example, from this article that was written, 2 strike prices were picked out, obviously being bullish, meaning that we had at the time the intention that with our analysis, this should mark this corrective move higher, whether it was just a corrective move or a new bullish trend, it's going to keep on going higher for the next 2 days and settle on Friday above the strike prices. Let's see what happened. Here's your other demo order. Once again, with the execution price, I don't need to really cover this too much. It's the same thing as before. Then here we go. Now we have on this chart here, the strike prices. 107.25 is the upper price, and then we have 106.75 is the lower price. So once those trades have been put on, here are these levels. You can see that the US dollar Japanese yen was trading above the 107.25 strike price. So at this point, both of these positions were positive. Now, based on the pricing at the time of when the trades had been put on, the pricing at the moment later, as the day goes on, fluctuates, but no matter what, they're still positive. The market's above 107.25, and the market's above 106.75. Right now, these trades for a bullish trade are in a good way. So this is what happened. The market settled above both binary levels on that Friday. So as you can see, from the market did come back, but that's irrelevant. The market still settled above 107.25 and above 106.75. And as a result, this is what happened. You can see once your positions are, once you enter a position, you get a response from the Nadex platform, and once your position is completed, you also get another confirmation. So for our first strike price of 106.75, here's the details once again. We were betting on, or looking at on being long, the US dollar JPY greater than 106.75. Quantity 1, expiration value was 107.599. So the payout amount was $100. So the profit on this option was $100 minus the initial outlay for the purchase of the option. Here, once again, is the 107.25 demo information, where it shows quantity 1, expiration value was the same strike price. Obviously, that's where the market settled. Payout amount of 100. And once again, your profit on this trade, had you purchased these options, would have been $100 minus the initial outlay that we had put out. So the flip side, selling the same binary options would have yielded a loss. So in the example, it was a bullish analysis, and that was the trade that happened to work out properly, and everyone in a perfect world would be very happy. But this doesn't always happen. So if the US dollar JPY would have trended lower, there would have been a loss. So now the drawdown is still always defined, which is nice. So the only drawdown on those trades, had you purchased them and the market had trended lower and settled lower on that Friday, then you would have only lost your outlay that you had taken for each of those trades. So if your upside would be, had the option expired above those strikes, like it did, would be $100 minus your initial capital to buy the option, And the converse is, had you bought them, then your loss would have only been what you had paid for the options. And also conversely, had you sold the options and the market had gone down and broke instead of rallied, then you would have profited in the other direction. In this example, the market rallied, so selling the options would have been a loser. So so for those who didn't like the analysis or would not have agreed with the analysis, they would have taken the other side. In this example, they would have been incorrect. So always be prepared for losses. They go with the territory. Every trader has to be able to understand that and accept that. So ready, set, go. Nadex binary options, limit your trade exposure. I think that now everyone has at least some grasp of that from the examples and the explanation so far. So this is one well-designed way to control money management of trades, like we had already talked about as far as the whole issue with being stopped out in the futures or in the cash Forex market. You don't have those issues when you're using Nadex binary options. You always know what your risk is, whether you are purchasing the options or whether you are selling the options. So but at the flip side also to that, you also know where your profit potential is also capped out at. But like I said, it's more on the protective side with this being stopped out and having that actually exaggerated because you're using futures or FX cash instruments, that you can avoid that with the Nadex binary options. And that's probably one of the biggest things for newer traders and even experienced traders to focus on, because that ultimately you're looking for a positive return. You want your P&L to be pluses, not minuses. So now let us trade in the now and see what potential opportunities the market may have to offer. So the markets to look at today that we are going to be focused on are the major crosses, and we're going to cover the Euro US dollar, the US dollar JPY, and then the US dollar Canada, and if we have a chance to get through it, we will also attack the Australian dollar US dollar cross and the British pound US dollar cross. And just moving forward right now, we are only taking a technical approach. We're not looking into any of the fundamentals of geopolitical actions that are going on or anything like that. We are only today looking at the technical approach. So with that, let's get to the charts. Okay, the first chart here is the Euro US dollar. So this is where we start, and where I always start is with the monthly chart. If you want to find levels, I think that the best way is to always look at what really has impacted this market the most significantly. And the only way to really look at that is in the longer term charts, in my opinion. So in this example, right here on this chart, this is a current chart of the euro where they're at with the monthly, and you can see with the trend line that starts in the very upper left and goes down that this market has been trending lower for the past decade, literally. So anyone can see that. I don't think anyone's going to question that. So now from that, you can see that where there is this colored area here, I took this high, and then I took this last significant low down here, okay? So I used that, and you can see these numbers here and these levels. This is a Fibonacci sequencing here of support and resistance. So you take this high and this low down here, and then the formulas, which that's a lesson for another day, or you can just use any platform out there or technical trading software. They all have Fibonacci for the most part. And when you hit your high and your low, you generate these numbers here. And you can see there's a 0.236, a 0.382, a 0.5. And the 0.5, I want to say, for Fibonacci is very big because all traders that come from the floor, or even technicians that are into Fibonacci or even Gann analysis, the 50% number typically is a huge number for traders. So I always use that, incorporate that, not that that is a high and a low all the time, but the 50% is a gravitational target. So with that being said, you can see that I use the yellow lines here to extend forward. So this way we have, these are the monthly Fibonacci support and resistance numbers, these yellow lines here. They're an extension of these numbers here that from the shaded colored area. So from this now, this monthly example, we have a lower trending market and we have support and resistance targets to look for. So we're going to switch now from the monthly and we're going to go to the weekly. The reason we're doing this is because we want to look to trade in the now. We don't care about what's been happening for the last 10 years. We actually want to know what's going to go on for the next couple of days or the next week, or how we can potentially capitalize off of that. So now that we have this on a weekly level, now all of a sudden we have some numbers to look at. So when we look at the scenario here where the most recent weeks are, we can see that here we have the level at 117.50, and then we have the level here of 112.23. Okay, so now this here with these monthly numbers, fib numbers, these are monthly pivots. Now you can see that on the weekly, the chart looks a little bit different. This 117.50 level has a lot of trading around it. It came to this area, it became a nice support base, and it was also a little bit of a resistance base. So this area here is a pretty solid technical number. Obviously, this is from the most recent low down here up from that prior major monthly high. That's where these numbers come from. Even though they're monthly numbers, they hold up for a long time. The market gravitated to these major points and stopped or didn't stop. And from those, we know how the pivot works by how the different retracements happen. We're going to break that down now. So here we have the 107.5 and 112.23. So for our Nadex binary levels, this would be the range that we would look to work with. And now we're going to break it down to a daily chart. And here we go. This is how we know which ones to lean on. So this trend obviously has continued to be lower. And you can see here where the 117.5 area is. Look at all this resistance here. You have all of these little highs here, right here. The market fell through this level, gravitated back, was kind of hovering, but really couldn't be supported there. It's acting more resistance. So in the short term right now, we're looking at a daily chart, and we're trying to think about a trade. This would say, in my opinion, because of this level here and all this resistance, 117.5 would be a major resistance level to look at binaries to, if you were, since this is a bearish example, to sell. The market is most likely not going to get above that right now. Now, if it does breach this level, as you can see here, it kind of fought to it and it fell apart. So the trend is weighing down. It's having a real tough problem at this level. And since the trend is your friend, and you typically want to trade in the direction of of where the momentum is, this is a good selling area. But conversely, if the market was to settle above it and get a good move above here, especially if it can maybe take out this high here, well, then that's a different story. That's a longer term scenario, and right now we're looking for a trade that's going to be over the next couple of days. So we're going to use this range of 117.5 and down to 112.23, and we're going to look at the Nadex platform and see what's available. So we're going to go here on the left of the platform. You can see a list that says indices, Forex binaries, and all kinds of other different options to look at. We're going to click on the Forex binaries. And now it has all the major crosses that the Nadex offers that you can trade. So we're looking for the Euro US dollar. Here it is. We can click on that, and you can see that it has different options that they're available to look at and get quotes from. Now we're going to go all the way down to weekly because we want to have a trade that not just we're trading for today or a certain number, but something that gives a chance to work. And also, like I said, since you're buying time, why not use that to your advantage and find a trade that you have put the odds in your favor of it working out profitably for you. So with that being said, we now have the weeklies pulled up, and our range is 117.5, and there is a 117.75 option and a 117 quarter option. So for the pricing, you can see the bid and the offer is very small. These options are far out of the money, but this is the beginning of where we're looking for our strategies to work on. So here's 117 quarter, so we know that there's options available up to the extreme upside of our range. And now we'll go down to 112, and here's a 112 quarter and a 112.75. So we know that within this range that we've already established, there are plenty of options available on the Nadex platform to execute certain strategies, depending on whether you're bullish, you're bearish. Everyone has their rationale and reasoning, and now we're going to try and figure out what we can do with that. So let's try and tighten it up. So we know that these options are available on the Euro, on the Nadex platform for the Euro US dollar. So let's go back to it again. Now we're looking at this area, and let's see, we had the 117.5 where we have all of this resistance. Now we come down here just a little bit lower and look at where this range is. You have a little support. We have a low over here. We have some lows over here. And then we also have the market rose and then it fell apart. So the market is bearish. The trend continued once it couldn't hold up in this level. So this 115.26, 115 even to 115.5 is pretty much an area where the market is established that it's another pivot point. You have the lows here, and they're all bobbling here, trying to hold up above it. Obviously, below it, the market is not. It's weak. So let's go back to the Nadex platform and see what we have here. Now we look at around that range. We have 114.75 and 115.75. Those are a little bit wide. So the 115 quarter is the closest one to where those significant lows they were building up. So this would be the option today, that going forward, looking for an expiration that will end on Friday this week, the 115.25 strike price would be the first major pivot strike that I would look for. And in this current example, let's go back to the chart. We have the market right now is trading just below 115 even. It's at 114.59. So a 115.25 strike price would be a place that if I was very bearish and thinking that this trend is going to push the extremes, then I would sell this level. The converse is, if you're bullish and think that it has the chance to rally back up to that 117.5 area, then buying the 115 quarter option strike price weekly option would be the play to make today. So now there's a couple other areas that we can look at with the euro. Now the 115 quarter, this has a price of bid ask of 21 at 26.75. Now if you go to the 115.75, then it starts to get a lot cheaper. Now some people may think that a cheap price is a good deal. Maybe it is when you're buying shoes, but not necessarily when you're buying options or placing trades. Doesn't mean that it's not a wrong price either, but it's not a way to look at it. And then we have the 114.75, which obviously are a little bit higher in price, but that's because they're in the money already. So that being said, because 114.75, let's go back to the euro chart just in case people don't understand the in the money. The market's at 114.60. So 114.75 is just above that. It's basically right there. So there is much more value at the current strike price than there would be at the one that's higher again, like we said here at the 115.75. So 115 quarter being that middle range seems to be a good pricing as far as for selling and for buying, because for selling you're getting a decent premium, not as much as the lower one, but then you're trying to push how low the market's going to go. So, and let's get back to our pivot. We think that the market's going to stay below 117.5 with this analysis. As you get lower and lower in strike prices, the odds of the market being above those prices is much greater by Friday. So will the market be above 115 even on Friday? We don't know. We won't know until Friday comes. But right now, it could stay in this little area or chop around it, but we don't know, as we're not that bearish at this level. We're bearish at 117.5. So we need to find a price point that gives us some leniency as far as giving us room for a direction lower, but also the market can trend a little higher and we're not going to just lose on the trade. So once again, I think the 115 quarter would be the key pivot that if you're bullish, that would be the one you'd like to buy, and if you're bearish, you could sell against that level. So now let's move on to the next market. Let's look at the US dollar, Japanese yen. So now in this market, you can see it's once again, we start with the monthly chart, and the market had been trending. Now the Japanese yen has been a very interesting trade for already now basically 25 years. But it definitely had a very big run for a nice little period there from 2012 to 2016. Since that period, it has gotten very, very volatile. You can see the extreme sell-offs it's had, and then now it's kind of moving into a wedging, narrowing trade over the past year and a half, 2 years. So this is very interesting in the sense that we get a lot of Fibonacci levels in this high range, but as far as direction, it's a little bit harder than the last example. Overall, this market has been trending higher since 2012, but like I said, since 2015 to 2016 here, you have this sell-off, and now it's turned into a very wide range trade over the past 2.5 years. So directional bias right now is very neutral. You have the resistance from this major high. You can see this blue line that descends and comes down, and the market tried to pop above it, tried to close above it. It was right there. Then the market now currently, because this is a current chart on the monthly basis, is below this resistance line. So the market is showing weakness in this range trade currently. As far as support, we have this last significant major low right here, and then we have this one here, which is what gives us this blue trend line that's rising. So as this market is wedging into this resistance and support little triangle here, you can see it's getting tighter and tighter. So that's kind of nice because we have these Fibonacci levels right here to use. So let's see if we can figure out some direction and potential trades with this one. So we go from the monthly and we go down to the weekly once again. Okay, here we go with the weekly chart. We have all this activity right here at this sloping resistance line that's coming down here. And also at the same token, there is this 112.36 pivot point, Fibonacci pivot point. The market tried to get above it. It did, couldn't settle above it, kind of settled on it. Then the market tried to hold above it and just turned back. So for the past month, it hasn't been able to get back above this 112.36 pivot area. This is kind of key because with this down sloping trend line and then this key pivot, weakness prevails over strength right now. And the market is obviously moving towards this other pivot of 109.35. So for a range for us right now for the Japanese yen, US dollar Japanese yen cross, the 112.36 level and the 109.35 level are two key pivots to start our range to look at binary options within that range to trade. So we have a little bias. We have our resistance level at the top. We figure the range and the lower range. Now let's go to the Nadex platform and see what we have that's available. So I'll close down the euro and then go down on the left here to the US dollar JPY and click down on the weekly, just as we did for the other example. And here we go. We have the US dollar JPY options. You can see it has 4 days left till expiration. You have your pricing. This is all current in the market, what's going on in the market right now. So we look for the top of our range. First was 112.36. So there's no 112.36 strike, but there's a 112.75 and a 112.25. So we're going to go with the 112.25 because that's the closest. We kind of use that as a basis for our range. And then we have the 109.35. Once again, there's nothing right there, but there is a 109.25. It's just below it. So the 109.25 strike price and the 112.25 strike price is what we're going to start to look at for the Nadex options. And if you come over here by the bid and the offer, you can see it's the mid-range of the pricing as well. So back to our chart, we've discovered that the Nadex platform has options that we can use. So let's try and figure out directionally what we should look at. So here we go. The market's been trending lower. The resistance line is here. This is a weekly chart. So now let's go to the daily and refine this, since we're trying to narrow it down for just this example that we'll be only on for 4 days. So this really is much clearer than the monthly and the weekly. You can see that the trend here is obviously lower. The past week and a half to 2 weeks, it's been basically settling on its lows, or not lower each day consistently. And it had trouble with the downward sloping resistance line from the monthly. The market tried to get above it. It had some closes and had a rallies, but here we have a thing that changes our mind for the upside. You have this low here, and then we had a lower high. So we go from this high to a lower high, and then we have another lower high. So these series of lower highs is the trend is trending lower. Lower move highs, lower move lows is indicative of a trending lower market, and the trend is your friend. So let's look for a trade that would go along with that. So our strike price, we want to find something closer to where this resistance line level is. So we have the 111 area right here. So let's go back to the Nadex platform here and look at what we have here. So there's no 111 strike price, but there is a 111 quarter, and there is a 110.75. So the 111 quarter looks to me like if you were going to be bearish, this would be a nice level to start to think of to sell. There's a little bit of premium. There's only 4 days left. It's a low risk sell area. Now, if you're bullish, which in this case, let's go back to the chart, trading back above 111, especially if it gets above 111.5, would mean that this high would be taken out. So now we have a neutral to higher bias that would be unfolding on a daily basis should the market spike back up towards that direction. So for those of you that are bullish and think that this negative trending market is finally going to get back above the resistance and make a play for a higher move level, higher move highs, then buying the 111 quarter or 111.75 binary options would be the play for you. The trend is your friend, and the way this is looking right now, I could see, I mean, it may have a rally over the next day or two, but I think that settling below 111 even or 111.5 for sure is probably the range you want to look at for selling. Reason being, we go back to here, we have a high that was right below, it's 111.40. Then we have here this area, it's just above 111 here, lots of resistance for these highs. And then the same thing has become support. So this 111 area also comes in right around where the sloping resistance line is. So that's a key area. So anything above that, especially sustained and on a closing basis, would be indicative of a market that is becoming neutral to bullish, in which case you would want to be long those binary options. So once again, let's go back to the platform. We're going to look at this number here again. There's the 111 quarter and the 111.75. That I think would be the ones, if you are bullish, you'd be looking to buy those, and if you're bearish, you would sell those. Now, the 110.75 binary option is also something that's close to the market price, but let's take a look at if you do that. The 110.75 comes in right in this area, right about here. This is right in the congestion of trading. The market currently is below it. The market may continue lower and never come near these strike prices again for the next month. Who knows? We will, by Friday, we'll know exactly what has occurred. However, if you look, there's a lot of congestion here below 111 down to about 110.25. So a 110.75 puts you kind of in the upper end of that little digestion range that is shown in this area here, and this area here, here, and even here, that there is a consolidation of trading that occurs in that area. So on a risk basis and a trend basis, like I said, the two other options would probably be the better strike prices to take a look at. Now, let's take a look at the British pound US dollar chart. Once again, we're at the monthly level, and you can see that the British pound has been trending lower since 2014, and very steeply. Once again, this is a technical webinar. We're not going to get into the political things. We're not going to get into Brexit or anything like that. So from this chart though, you can see we have a major low that was set down in the 2016 area, 2017 area, this little consolidation here. And since that, it's been rallying into 2018. And then now in the recent months has had a slide again. So this gives us a chance to get direction once again. We know it's a bear market. It's been trending lower. There was a corrective move higher that has failed, and now the market's trending lower. From this, we get our Fibonacci levels. Once again, from the low down here to this short-term high, we find these little levels here that we're going to use to key off of on the weekly and daily charts. So we go to the weekly chart once again, and here we go. So with this chart, you can see that at these levels, you can see where there's consolidation of support or where it acts as resistance, which that's why we use these levels. There's a lot of viability in the fact that they don't necessarily act as highs or lows to the actual price point, but there's a huge gravitation of trading where you are typically buffering up highs and lows and settling prices. And that's why we use these levels. And like I said, we start with this as a base, then we look at the Nadex platform, and from that you pick the options that you can use accordingly with those different levels. So here we go, we're looking at this. We have the lower trending market, and we have what? We have the 128.74 area here and the 124.64 area. So this is kind of a nice little bottoming range here. The market has trended lower with all this weakness. I mean, if this was a longer term trade, we're only looking at a weekly option. So this is a weekly chart. Obviously, these moves take weeks to occur, not just 1 week. But on the 1 week basis, it looks that the market is definitely, with the momentum, belongs to the bears and not to the bulls. So below 128.74, the market is definitely in that kind of mode where it wants to press support and continue lower. Above that, then we might see something else occur, because the reason I say that is if we go back on this chart, you can see this 128.75 area. The market had trouble the first time it tried to get here. It got above it, bounced, and it became a little choppy range before it established its trend higher. It was moving higher, but it was inching higher. So for whatever reasons, this price level has significance to the major, especially probably the cash traders and the banks. And then once you have it below here, you can see where just 3 weeks ago, when it came through here, it settled lower. Last week, it wasn't doing much. It tried to hold the price, nothing really occurred. And today, right now, as the market stands, the weekly is a little bit higher, but nothing significant. So we're going to look at the Nadex platform for this range and see what we can find for trades. Okay, we're going to close down the US dollar JPY. We're going to go to the British pound US dollar. Once again, we click on the weekly, and let's see what kind of trades we can find here. So for the weekly, we have our range. We have 128.74. Well, there's a 128.75 strike price. So that's right on the money. So we have that one pivot that is a Nadex binary option level. So we're going to look from the 128.75 down towards the 124.64. So we go down to 124. There's a 124.25 and 124.75 binary option for the weekly. So the 24.64 is closer to 75, so we're going to use that. So our range now is defined as 128.75 down to 124.75. So we know there's action in that area. And as we can see, we have where the 124.75 is. These are in the money, so that's why they're so expensive. And as you get back up here to the 128.75 area, these are cheaper. The market's in between, is below that, but it's kind of in that area. And then above it, obviously, they get cheaper and cheaper and cheaper because the market's far away. So let's go back to our chart and see what we can find for the binary options. So once again, we have the weekly. Now let's go down to the daily and kind of hone down what we can possibly do with this for trading. So we have the 128.75 level once again, and then we have the market where it's at trending here. So it's kind of rounding around the last 2 days. It's been up, nothing major. The ranges aren't very wide. There's no big gush of momentum for a bullish rally there that anyone can see. So it's kind of quiet. The overall trend is still lower. So the closest key pivots here, you look at here, the market's at 127.83 right now. So let's go back to our Nadex platform, 127.83. Well, 127.83 is right above our 127.75 option right here. So let's look at the pricing, 127.25. Here you go. It's right in the middle point, 51.25 at 54.25 for the bid and the offer. So if we are bearish, we would look to sell some option somewhere within this range of where the market's at, this 127.75 up to the 128.75, which is our upper extreme. So we have these three options here. So you can sell these right now. The 875s at 18.25, and the 27.75s are at 51.25. So let's go back to the chart. So bearish, if you believe that the market will stay below the 128.74 pivot area, 128.75, then the 128.75 is probably your very best option because that's right there in the money. This way you don't have to worry about that there's just a teasing bit of resistance going in, trending into the rest of the week as far as being short. You're right there in the money. It's now for the buying of the option, this is a totally different story. A settlement above here would be very bullish later on, and especially to end the week if it could trend higher for the next few days, but that would be for a longer term trade, which we're not focused on right now. We're looking at something that's going to expire this week. So if you're looking to buy the market, then let's go back down towards our 124.64 area and start moving back up. So we have all these levels that are spaced out, and as you may have noticed that they're 50 cents apart. So let's look at the British pound on the chart here and check out this low. The recent low was at 126.61. So if you don't like the scenario of selling into this market here, using that, once again, the 126.61 low, we'll go back to Nadex charting platform. We have 126.75 and 126.25. So the 126.25 are pretty expensive. The 126.75 is a little bit cheaper, but still it's a lot of money to put up because when you purchase the option, your upside would be a little under $20 and your versus your risk of 100. So right now with this level at this pricing, that's a little sketchy and a little tough to really lock into. The 127.25 options, those are a little bit cheaper, but like I said, then you have to really think about how close is it going to gravitate to this level and is it going to be strong. So because the overall trend is bearish, and with the momentum that it has had on both a monthly, a weekly, and a daily basis, going back to these options to protect the low, if this low is definitely a short-term significant low, then buying these lower options is a very low risk play. However, with momentum and the way the trend is, I think that the selling of the upper options around the 128.75 area is probably the better play than trying to catch a falling knife. And that's the problem with with the way this market has been broken down. As far as our analysis is also breaking down, period. The momentum is just too hard to try and be a buyer at the lower levels. I can see buying a breakout, but not buying, like I said, trying to catch a falling knife. I think that that's a problem that some traders try and do and try and get involved with, and picking highs and lows is something I would highly suggest any of you listening ever try to do. But you use prior highs and lows to trade off of and use for different trading scenarios. But don't try and pick where it stops or where it's going to turn, because you're going to be Don Quixote chasing windmills. So don't do it. And with that note, let's move on to the next market real quick. We have 10 minutes left, so let's take a look at the US dollar Canada and see if we can breeze through this in time and maybe even still get to the Australian dollar as well. So once again, we are here on the monthly chart, and we can see that the Canada had trended higher for months into 2016, and in the period of 2016 to 2018, it's trended lower, but it's settled into kind of a very wide range trade. And once again, we are only looking at this technically. So from this, we find this current high back around just at the beginning of 2016, and down into this low that happened in 2017 as our high and our low for our Fibonacci numbers. The generated colored area would give you those different levels, and the yellow, once again, these extensions help us to see where they are moving forward as we break down the charts. So those are the monthly levels, and now we're going to go down to the week and see where that is. Okay, now we have a little bit more clarity with what's going on in the Canada, because the monthly example was a very big wide range trade of sideways, which doesn't help us when we're trying to figure out if we're going to go long or short, or in our case with the binary options, is the market going to be above or below a certain strike price on expiration. Now, if the market does happen to be favorable for you in these trades, take note, you don't have to wait till expiration. For our examples, we're using expiration. But at any time, if you have an options trade on that is profitable, you can always execute the trade early and take profit early. There's no reason you can't do that. No one's going to stop you. And you may also change your analysis. You may have a trade that's a winner and something happens in the market and you believe that no longer is the market going to settle either higher or lower depending on the trade that you entered. And the smart thing to do would be to get out, absolutely. So back to where we are with the Canada and the current weekly trade chart rather. So as you can see, the market has been trading for the past month and a half above the downward sloping resistance, but it spiked up and it's trading lower off of that range. It's not in the upper part of that range. A newer significant high had been made and a newer significant low had been made where the market touches here on this downward sloping area right here. So this here is a nice little thing, this little pattern here. We have this low here, higher high, lower or higher low, higher high, higher low, and the higher low bounces off of our downward sloping resistance, and we're hovering right around our Fibonacci monthly pivot level. So with the higher move highs, the higher move lows, and the fact that the market has stayed and closed even on down weeks above this downward sloping trend line, right now the bias should be neutral to higher. There's no reason to think of anything else until at least this low here off of this trend line is taken out. So let's look at those numbers real quick. So this low right here, just for our reference, is 129.64. So we need to keep in mind what that is. So let's go look at our range here. We have 130 as a pivot level on the Fibonacci. So with the trending move higher, 130.78 would be a pivot level. We're looking for the market to be stronger and above. So let's go look to the Nadex platform, 130.78 on the Canada. Let's see, US dollar Canada. We have to go down to the weekly. And we have 130.75. There's an option right here. So 130.75 is a binary option. Let's go back to this chart. This is the weekly. Now let's go to daily and see what we can do with this, whether we really want to be long or short this option, or look at other options in that range. Okay, so the 130.75 is the strike. Okay, now here things look different, and this is why we go to the daily and use all these different time frames. The monthly and the weekly from this example have us in kind of a bullish bias. But if you look on the daily, it's a totally different story. Now we're looking at lower move highs and lower move lows. So this area right now, the market has been, you can see, it's consolidated around this 130.78 area. It's 130.75 for the binary option. The market had trended up, spiking, but keeps on falling back on it. And you have some, again, a gush. It tried to get up. Nope, it fell apart and it's trading below it. So right now, I would say, because the bias on the daily with this last high here, that this would be the area you're probably going to trade against as far as for another level. So if you're bullish this market, I would be very careful until the market gets above here, because this high right now is a lower move high. So it's going to be major resistance. So if you're bearish right now, selling at this area, so that'd be 131.75. Let's go back to the Nadex platform. There's a 131.75 option, so this is great. So we have two options to play with. Now these are very cheap because they're very high, but once again, we're looking at these for potential breakout levels or major resistance areas the market will stay below. So we come back here, and like I said, this key pivot area here, the way things are moving with the lower move highs and the lower move lows, I think that you should stay away from this area. Initially, with the weekly and monthly breakdown, I thought that this would be a nice area to look for potential action, but I think now this is kind of you're coming into a very negative situation where things could go sideways. Not negative meaning that the trend overall monthly and weekly is going to go down, but on daily there's just too much noise. So for the weekly options right now, if you're really bullish, then I would say, since the market's right here, well, then you're bullish over the next 3 days or going into next week, buy the 130.75 binary option would be the one to go with. If you were bearish, then it would be to sell it. And right now, the way it's trending on the daily, it looks like the market wants to make another play for that downward sloping resistance line on the monthly, which is this blue line here on the daily. So the US dollar Canada for our analysis today is not as easy as the other markets have been. So I think that the levels that we found for the Euro US dollar, the US dollar JPY, and the British pound US dollar were much easier to figure out what levels to trade, whether you're bearish or bullish, and where I think you had odds of seeing market movement that could help you out. The US dollar Canada, right now, the way it's looking, I think is falling into too much of a sideways neutral area, and it's going to be a little choppy. So bulls and bears, I think it's going to be a little bit of a crapshoot, and I would personally just stay away from the US dollar Canada. Wait for a breakout, so either the upside above this high right here, or for a test of support down on this low here, which would then mean that we have, once again, lower moving lows, confirming a lower move high, bearish direction, and the Canada, at least in the short term, is probably going to continue to be negative. So with that, let's return to our PowerPoint once again. Sorry for the little break there. So once again, we looked at the markets today, the Euro US dollar, the US dollar Japanese yen, the US dollar Canada cross. We didn't get to the Australian dollar US dollar, but we did get to the pound US dollar. And we looked at different binary option levels that both bulls and bears could trade off of. And also different ways to look at analysis of breaking down the markets today, as well as how to pick binary levels. Which ones would you look at? You know, there's a lot you see that there's all different levels being quoted. Most of the strikes are not going to be where you're going to be looking, you know, so that the key is to find your range to the upside and the downside, narrow it down to the closer ones to where the market is, and then depending on whether you're using a daily, we use weekly options, so that gives us time, especially like in a situation like today where we're in the middle of the week, or excuse me, the beginning of the week. So you have, you know, a whole week to unfold. So with that, let's move forward real quick. For our wrap up, do your homework, just like we did here. Start with the monthly, the weekly, the daily, put your trend lines in. Doesn't matter what techniques you like, use what works for you. Look at the markets, weigh the potential trades, and then, like I said, we talked about the futures and futures and the Forex cash, how getting stopped out happens to many traders often, and is definitely a drawdown booster instead of a profit booster. Trading, look at the binary options as a way to buy time and to avoid the market swings. I think from what we broke down, especially with some of the volatility, to those of you listening, maybe it makes a little sense on how you can get long or short the market and not have to deal with all the stress that the futures traders do. So have a plan and stay the course, all of you that have been attending this webinar. I hope that you enjoyed it and gathered some information that you can use moving forward. And, you know, if you would like this webinar, reinforce what you have learned with a book of practical trading knowledge, you could read a book that I have written called High Probable Japanese Candlestick Patterns. When we first started our introduction, we used that article that I had written for the Nadex exchange on the US dollar, Japanese yen, using one of my high probable patterns that are very useful for traders of all markets. So utilize the best buy and sell patterns used for over 400 years with the high probable Japanese candlesticks. So with that, if you need any more information, you can always go to the nadex.com for the Nadex binary options information on their website, or you can get Forex market information at forextradingunlocked.com. Find both of us on social media, like, follow, and subscribe to stay up to date on what is going on in the markets. 24 hours a day. I mean, the markets aren't going 24 hours a day, but our information, our sites are up and it's there for you. So with that, thank you very much for your time today. I appreciate all of you that have attended, and hopefully you'll attend another one in the future. Check us out, and remember, High Probable Japanese Candlestick Patterns by me, Theodore, or Teddy Keckstead, and it's available on Amazon.com. Thank you very much.